Is there any specific stock you're looking at right now that you think, this is too interesting to pass?
Oh, okay. Since this is not being published, like, well, at least I don't think it's being published today. We'll see. But I
Oh,
will
it
give you
will.
one.
Don't worry, it will.
Okay. I will give you one. I mentioned this briefly to Jay. So I'm probably going to make a video on this. I'm hoping the catalyst happens in the next day or two, and I'll have more on that. But the stock is Orca Gold, and I just want to bring up, like, it's
I never heard of
fascinating because it has an amazing management team, which is the Redback management team that sold Tasiast to Kinross, which was one of the biggest discoveries in the last decade in Mauritania. So it was in this really,
Wow.
high risk, or at least at the time, super high risk area. It still is, but like, I mean, it was what is it? I think 9 billion Canadian dollars or 7 billion US dollar sale. And no one's paid attention to them because their main asset is in Sudan. So it's like, oh God, Sudan, like that sounds scary immediately, a lot of people. But I definitely, have found enough info that they're looking at another part of Africa. And so like that's the, a perfect example of one that I've been following, and I was starting to build excitement. And then last week I saw, wait, what's this? Ross Beatty went from 0 to like 12% ownership in the company, and I saw it on
Ah.
CEO.ca. And no, and some people paid attention, so this will make a really fun video. We'll see. I'm expecting a further catalyst, and I don't want to share it yet because I'll have some. But anyway, it's got all these little elements. But yeah, that's the one I've been really excited about, and I was buying a lot of it last week. Yeah.
Okay,
So
cool.
you guys get the first
We'll
dibs
try
on
not to
it.
front run you.
It's okay. I think I'm good, but you never know. Yeah, so we'll see. We'll see. It's a little more liquid. That's the important thing too. It's like I just like there's no way I could tell you about a stock that's only like 2 million market cap, and like if like literally if you two were buying it, you push the price would double. But like
If Jay
this one's
alone
already
was
like
buying it, that'd be enough.
yeah, jail one is fine. But if it's this one's already 40 million. I mean, that's interesting too. Is like what can you share and can't you share? Like this is what I've learned. Newsletters, they just they can't share stuff on these little stocks because like even if they had like 50 subscribers, it's gonna shoot through the roof. So that's always interesting. The smaller you get, the more careful you have to be with sharing these if you really want to buy a decent sized position.
Hmm. You know what I was thinking? What about the people who are thinking, well, maybe it's over. Maybe the good gold bull run is over. Like because if the prices are coming down, then what's the point in holding the stocks without really having any guarantee that the prices are going back up? Because gold itself sort of breached that 1300 level,
I,
and we don't know. It may fall, to like, what if it goes back to $1,000 an ounce? Like, when do you say, okay, this is enough? Maybe this really won't pan out how we planned.
I think the people who feel that way are the people who haven't experienced real pain yet. The
What do you
pain
mean?
that we all experienced as kind of early entrants, the last 4 or 5 years. So, I think a lot of people saw the sector turn earlier this year, so they started to get interested. And up until now, we haven't had a substantial pullback. So, these little moderate dips along the way, you can stomach that a lot easier because, you kind of you build this into your mind, kind of like, okay, it's going to go up 4 or 5 days in a row, then it'll pull back for 1 or 2 days, but it'll be really brief, and then the uptrend will resume. And it's a great market to make money in, like that affirmative bull market that we experienced for the first half of this year. But you don't really get your resolve tested until kind of last week, and what went on there, and then everybody starts questioning their thesis. And I have friends who jumped in late, and like we were talking about earlier, First Majestic is just a good example. Liquid stock that has sold off quite a bit. I have friends who got into that story around $13 to $16 range, and to see it below $8, that's going to test your nerves and your stomach. And it's the first, I think, gut check that a lot of these new investors have or are experiencing right now. But, if you've been through the cycles kind of before, and I guess for me, I'm kind of tuning out the noise a little bit more, just because, we haven't seen anything in comparison to what it was like in late 2015, early 2016. I mean, even with the most recent sell-off, you get like 4 or 5 days down days, and then there's like one up day, but it's a pretty big move back up. Earlier this year, beginning of 16, it was just down, like, double digits, even like every day. It's just it felt like kind of like what uranium is like right now, where you look at these uranium stocks, right, Fabi? And
yeah,
like,
I was just checking one of
cheaper?
mine today, and it's down 26 on the day, 26%. I'm like, what? Today? Is this like for the week, for the month? No, it's for today. 26.
Wow.
Yeah,
down. Wow.
And like uranium is a good. Just to draw that parallel, just to look at uranium, for example, it's like, I bought a uranium stock last month, and they had a private placement. I think it was like in the $1.80 range, and now the stock's trading at $1.40. So you're already out 20+%. Like just in a month or two time, and it's you got to have some like serious. Like threshold for pain to be able to withstand all this. Because I just think the first reaction for most people is, panic, and, I'm going to want to sell because, either that or, like most of my friends who are buying on the way up, they're basically not buying now, even though instinctively, it makes more sense to buy on the dips. They're basically saying, I'm just going to close my eyes because I don't want to look at this. It's just too much pain to see all that red in my portfolio. So it's just a good lesson. And, a lot of the industry veterans, they like to advocate, along the way, when you make you're in profits, let's say you have a 100% plus gain, it's not a bad idea to start booking some profits along the way. You really greatly reduce your cost basis by doing that.
Mm-hmm.
That's a great answer. Well, I'm glad you answered first, because I don't have to touch on as much. I think that the 2015 end of 2015 comparison to now is excellent. It's just like, if you're new to this, you don't know what it feels like. I mean, there's both a good and a bad to that, because if you came in too early, you got crushed. But right now, I think this further, at least in my mind, it further validates my personal choices. At least I mean, we'll see if it pans out this way, but I know that pretty much everything across the board within a couple areas. I mean, let's stick with the precious metals, because not just gold, but silver. I mean, that totally shocked me that these silver optionality plays just went insane. I mean, really, arguably silver was the place to be over the last 6 to 8 months, which I barely own any of. But, whether you were buying explorers, whether you're buying, the producers, or even, some of or developers, I mean, you could have made money across the board. And I think that says a lot about, how incredible the basically this bull market start is. I mean, I think we'll look back, and if you start comparing the first half of 2016 to the beginning of previous bull markets, you may be able to argue this was the most impressive at all. I haven't heard anyone talk about that yet, but really that's been incredible. I think it's important to place it in context of, what could happen going into the next year. While I definitely, personally don't expect gold to be going, under $1,000, I think that'd be very, very unlikely. I do think we could, continue to be in more of a range, with gold and silver than some other people realize. And what that means is that some of these very extreme optionality plays are not going to perform as well, because they've performed really well because of this expectation that it's, we're the beginning of the bull market, it's just going to keep going up. So from my perspective, it's another reason it validates looking at explorers, because I'm looking for, and this isn't just gold and silver, it could be uranium or copper. Like, if they find something, that's really economic and high grade in any of those commodities, you will make money. And I always like to look back at this deep bear market, going back 2011, 2012, 2013, the two plays that performed exceedingly well. Actually, I can think of three right now off the top of my head. We've got Reservoir Minerals, which was a copper gold play, which it was over a 10 bagger, right in the depths of the bull market, though it was helped a little bit by copper. Then you've got Fekola, which was part of Papillon, which is bought by B2Gold. We're going to look back and we're going to see that B2Gold made the best acquisition. Like I'm just like, saying this for the record now. A lot of people have kind of forgotten about that, but that's going into production next year. I mean, it's an amazing asset compared to anything else out there, but it was a great performer. I mean, that was like a 30 plus bagger on the Australian markets right in the middle of the bear market. I mean, it's just like a lot of people don't realize how well you could do with a discovery play. And then one other one is Gold Quest, which is neat because it went up like over 20 times in, was it 2012 or 2013? Again, right kind of in the middle of the bear market. And then it came back down, but like you could have, made more money now because it's a developer, and that's Copper Gold. So those are three examples where you could do well in the bear market, but of course they would have done even better if they were right in the middle of the bull market. So you get that double bonus. So I've mentioned that before, but that's something I think that could stand out more, while so far you didn't even have to, get into those plays, which are inherently more risky. You could have made money, with these, crazy optionality.